Welcome to the Phoenix Blue Morning Update on Monday the 30th of May, brought to you this morning by Tom Colley. We'll have a short week this week after the bank holiday yesterday. The week will undoubtedly be dominated by non-farm payroll on Friday, where we will be looking for good numbers to firm up the probability of the Fed rate hike coming potentially on the 14th of June. If we fail to see that, we could, or if we get poor non-farm figures, we could see some doubt about that rate hike. We had the recent minutes of the FOMC meeting suggesting that the June hike was still on course, still expected. However, the other comments were interpreted largely dovishly about a further rate hike or the timing of a further rate hike this week, and the futures markets have reacted accordingly and are being more cautious about pricing in that third hike later in the year, which previously had been forecast to be in September. Okay, before we do anything else, we'll have a look at the news. Friday we had core durable goods orders out of the USA. They were well below forecast. We had a forecast of positive 0.4%. We came in at negative 0.4%. On Forex Factory, that is starred. It's because initially for a minute or so they did put the wrong data up there, and that's just their admission of that. But in terms of the data versus the forecast, obviously quite a big miss there. However, probably more significantly, we did see a strong prelim GDP quarter-on-quarter number, came in at 1.2% against a forecast of 0.9%, and we did see a rally on the dollar into the close on Friday. What do we have today? Well, we've had a Chinese bank holiday. The bank holidays, the short week, will mean a lack of liquidity in the markets, full stop. We're also at the end of the month today stroke tomorrow, which also can lead to some strange movements in markets as traders close out trades to hit month-end figures, etc., etc. Then with non-farm on Friday, definitely a week for caution, not to be diving in there, to be sitting on your capital and waiting to see how things play out as the market winds back up and we see that really significant non-farm payroll data on Friday. Today we also have consumer confidence for the US at 3 p.m. and then this evening we have the RBNZ for New Zealand, the financial stability report. So, quick look at the charts. We've had an open after the bank holiday of the dollar index, and we've had a gap up following through from Friday's bullish move on the back of that strong data. The yen, we are, however, also seeing a strengthening on the yen in the short term here, so we're not seeing a direct correlation between the dollar index, or which is dominated by the euro and the dollar, and the relationship of the yen to the dollar. So we're seeing more, I believe, euro weakness, which is confirmed by the chart here. We've seen a big fall off in the euro already today. You'll see that there's a couple of levels that we're interested in here to take this back to the long side, one being a retest of this falling trend line here, and a secondary level down here, which is clearly a significant level. We are intraday short in this market, or from an intraday entry last week. We'll be looking for further opportunities to sell this market on intraday pullbacks. Over on the pound, well, the back end of last week we saw this big bearish move down on Friday. This is a market we've had a committing to traders extreme signal here. We were in this month-long channel through here. We saw a clear break of that, and effectively we're now looking for that channel to be retested quite a long way away now, but a cautious entry. But we are very cautious on the pound. There's so much potential for volatility here. Brexit aside, we also have the election looming into view now. We have seen the Conservatives losing ground to the Labour already, still with a substantial lead, but still somewhat of an unexpected event. So possibilities of a great deal of volatility in this market. So we will be trading that cautiously in an entry such as that, where clearly we've got a retest of the channel in confluence with a falling trend line there and a nice level through this upward channel there. Okay, on the Swiss year clear level that we're looking to trade today, this 98.50 level through here, clear lows here, looking to retest all the way through here and here. In this respect, I've got an initial target. I'll be looking for the lows here for my initial T2 target. However, having looked at the commitment of traders data at the weekend, we don't yet have an extreme low signal. So I'll be watching that. You'll see I've got a dotted line in here looking at the data at the weekend. On a quick assessment for that, we may see a lower low down here before the market turns on COT data. The reason my take profit is at that level is that was just my view of the data at the weekend. We will undoubtedly get further data or further indication from the data next weekend, and we could see the market or the data moving to such an extent that we see a low around this level that we've previously seen the low at the 97 dead level. Okay, the other market that's something of interest to show you, this is crude. Last week we had the extension of the OPEC and Russia production cap agreement. We might have considered that wasn't very significant. This is the actual day of that agreement, and we can see a strong sell-off. However, what is interesting here, the 30th of September last year, this was the initial agreement between OPEC and the Russians, which according to data has been quite well respected. And what we can see, even though the meeting only extended the existing position, we saw a sell-off, but only back to the level where we were before the agreement was made there. So in terms of crude oil, for me, I'll remain bullish on crude oil until that $48 level is broken there. I'm looking at it in terms of a range, as we had previously, between 48 here and $55 on the high side, where we had a clear COT extreme signal for the thick end of 3 months through there before that broke down suddenly. So I'll be looking for shorts from around 55 or longs again from 48. Okay, so as I've already said, another week to be cautious, bank holiday, short week, end of month, non-farm payroll coming on Friday, that we would be looking to be very cautious with any trade entries. In fact, we'd have them all closed if they weren't actually active trades, looking to get trades to break even. I'll take profit where we are in them. So we'll potentially be playing technical levels intraday predominantly this week. I've shown you a couple of examples of end of day trades, but you'll see the positioning on all of those is relatively cautious. And if I'm 100% honest, I will probably think that we'll be looking at those levels to reaffirm them potentially again at the weekend. Okay guys, have a great day's trading, and we'll speak to you again in the morning. Goodbye.